Good morning and welcome this morning. There are the opening bells, which means that it's time to get started with trading futures this morning. Another great webcast from Schwab Coaching. I am joined this morning by my good friend Scott Thompson, who's a great educator and a good friend out there in the chat. He's there to help facilitate the questions and conversation, keep that conversation going. So, welcome to those of you that are here with us live. Welcome also, of course, to those of you that are watching this in the recorded version. There's stuff moving around this morning, a cooler than expected CPI print seems to be moving the market in kind of a bifurcated way, and we'll take a look at that as we get into this discussion this morning. Also, crude oil prices going up, but are they coming back down? That maybe is the question that we'll look at using futures and a little bit of movement relative to interest rates that is impacting and maybe giving us that bifurcated market. So a couple of things to take a look at here this morning as we get started. But before we do that, a couple of quick housekeeping items that we get into here that we need to talk about. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not any kind of a recommendation or solicitation of a particular account or strategy or anything else. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors, so make sure that you read the risk disclosure statement for futures and options prior to considering trading any futures products. Also, some of the things you want to pay attention to: futures requires a futures trading margin, or sometimes referred to as a performance bond, to initiate a long or a short position in a futures contract. So we're not buying necessarily or selling necessarily that contract. We are initiating a short or a long position in that contract, and be able to do that, there needs to be a margin amount available in an account. So that initial margin is the amount required to initiate the position, as the name implies. A maintenance margin is the amount required to hold on to that position. Those numbers are different. We'll talk about that as we get into this discussion as well. Remember that investing involves risk, including the loss of principal. And in the case of some products, including futures, the loss of more than your initial investment. Also, remember that when we trade futures, stop orders aren't guaranteed in execution. They work a little bit differently than they do in an equity market due to exchange rules based on certain conditions at the time of execution and activation. The exchange, the futures exchange, may reject the order entirely or substitute an exchange designated limit order in place of the originally triggered market order based on a protection range or band. So something to be aware of. Now, we're going to talk about, hopefully today, one of the things that's moving, and I teased this a little bit yesterday in the Cryptocurrency Basics webcast that I teach on Monday mornings, talking about virtual currency derivatives. So if you're going to trade those, or you're going to consider transacting in those products, remember to read the NFA Investor Advisory and the CFTC Customer Advisory. There are some additional and specific risks associated with trading virtual currency derivatives, so be aware of that. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. Not a guarantee of future success, great learning environment. However, it doesn't do certain things that a live trading account will do. Now, for us in the futures discussion here this morning, the primary difference is going to be in how the platform, the paper money platform, handles order fill prices. Those order fill prices will almost always fill at the midpoint between the bid and the ask in the paper money account. That does not happen in the live trading account. In that case, those order fill prices are based on market forces. So be aware of that difference as you move your trading from paper trading to live trading. Also, remember, as we get into this discussion, past performance is no guarantee of future results. So be aware of that. We're going to use some technical analysis in this discussion, and we're going to jump over to the Thinkorswim desktop software platform and see what's going on right off the bat here. The one that I wanted to take a look at really quickly as we get started is /MBT. /MBT, and I'm going to pop over my left-hand side menu here so that we can just kind of collapse this a little bit. And by the way, thank you for joining us if you're brand new to this discussion. We're going to jump right in, and then I'm going to take a little bit of time and stop and explain what we're doing. But right now, /MBT, the micro futures for Bitcoin, one of those virtual currency derivatives, in that we discussed yesterday in the cryptocurrency basics webcast. One way that investors can gain exposure to cryptocurrency in a portfolio is through the use of some of these futures contracts. It's been on the move this morning, as has much of the market that is somewhat sensitive to interest rates. So I've got a futures grid here that is on the left-hand side a one-year daily chart, on the right-hand side a today's 5-minute chart. But I want to look at what's going on here with /MBT, the micro Bitcoin futures, and micro meaning it's a smaller contract notional value than the large contract. As has Bitcoin spot prices, as have other Bitcoin products, this contract, the /MBT, has kind of been cruising along sideways underneath this resistance level right around the 64,000 level, maybe about 64 or almost 65,000, 64,606 in this particular case, just depending on where we put the cursor. That seems to have been, in the last little bit, a bit of a resistance level. We've seen some up and downedness relative to that resistance level in the last few trading sessions. But what's starting to pick up and what's starting to develop here is this move in terms of momentum. Starting to see the RSI pick up, that relative strength index, indicating a little bit of a bullish divergence, meaning there might be some buying happening as prices start to get pushed closer to those highs in those short-term time periods, in those in this case 1 year 1 day candles, starting to push towards those resistance levels. Now, that being said, for a longer term trend trade, many traders, some traders, I can't say most, I can't say all because I don't know most and I don't know all traders, but many traders would wait for a confirmation break above this resistance level that's been multiply tested as support and resistance. Okay. In this particular case, given the fact that we've seen this up and downedness, and we're going to pop over to the right-hand side here and to our next grid and take a look at this 5-minute chart, as Scott points out, waiting for some kind of confirmation may take us out of a lot of this very short-term move. Now, both are equally valid ways to approach a trade like this. And the setup is going to be similar to what we've been seeing in a lot of these names, why we're focusing on some of these specific names. Again, not recommendations, simply illustrative examples. So here's that resistance level. And what we've got going on this morning is a fairly common technical price pattern. Doesn't guarantee the price is going to move in a particular way, but it suggests that because prices have moved this way before, there is a possibility that it may move this way again. And I'm just going to draw this out. The pattern that I'm looking at is this kind of bull flag type flagpole pattern. So there's the first portion of our flag. It pulls back to a level of support. The presumption is that it makes a move to the upside equal to the amount of that flagpole that it moved to begin with. This is a short-term trade. If we put this trade on, this is likely to be over one way or the other, maybe in the time span of our particular webcast here. This is not a long-term trade. This is a shorter-term trade perspective in this particular case. Doesn't mean it's invalid and there's other ways to trade it, but this could be the start of a longer-term trade as well. It doesn't have to be mutually exclusive. So what we're going to do is I'm going to draw some lines here on this particular chart, and then we'll come back and dissect this. I'm going to take this support level right around the 63.042 level. I'm going to just draw this line to the upside. I'm just drawing from the support level to the top of that recent impulse move. I'm going to right click and I'm going to duplicate that drawing, and I'm going to take that drawing and I'm going to put it right up here. And I'm going to be a little bit more conservative than some traders might be. Some traders are going to look for putting that extension line at the breakout point. But here's what I'm looking for. I'm looking for a closing candle period, or a candle that trades above the high of the low candle in this pullback. So right now, if I want to think about it, I'm going to use the most recent red candle as kind of my trigger point for this entry. So in this particular case, uh, as we get to right this level here, that may be that trigger point. So, Sam, just because it's been moving that way for any length of time does not mean that any resistance is a hard resistance level. Um, if you take a look at what's going on, we're starting to see some inflows. Bitcoin hash rates are changing a little bit in terms of the number of Bitcoins that are coming to exchanges. So, what I'm looking for is a candle closing above the high of this candle right here. So, let me just draw that line. That's going to be my trigger for getting into this particular trade. My target for this trade is going to be just beyond that resistance level. Now, it may not get there, but that's going to be my target in this particular case. And we're just going to call this 65. We're going to call this 65180, 65180 at that point. That's going to be my target. My stop is going to be a move below this level of support by some distance in this particular case. So what I'm going to do, I'm going to quickly label the components of this trade. So here's my target in the trade. Here's my entry, and we're not quite there yet, entry into the trade. And then my stop, we can make that stop really tight, or I can loosen that stop up a little bit. In fact, I'm going to loosen that stop up a little bit, and I'm going to come right back down here. Let me draw my line again. Just below this candle right here. So if we break below 63,815, so I'm going to label that as my stop in this trade. This is going to be a quick trade. We'll see if this works. So I'm going to come over here. I'm going to put my cursor on my line, 64,134. Right click, and I'm going to create a buy custom with OCO bracket trade, right? So we're going to put this in as a buy stop entry above 64,150, 64,154. So I'm going to just put my lines in here. 64,135 right there, 64,135. And I'm going to make that a buy stop because I don't want to get in until it goes to that level. Right? I could get in right now. It's going to be a little bit cheaper, but I don't want to get into that point until it gives me that confirmation. Now, my limit to sell this is going to be up here at this target, 65,153. 65,153. Whoops. 65,153 is going to be my target. And we're going to make that good till canceled because it might not happen today. It could. And then my stop was going to be 63,820. We'll make it 63,820 as our stop. 63,820 is our stop. And we're going to say stop, wait until that price moves down to that level, then get us out of the trade. Now, we could make that a stop limit, and we're going to define our limit. We're going to make that a stop market. The exchange is going to designate a limit order based on that protection range. So we could do it either way. In this case, just keep it simple. I'm going to leave that as a stop market. Okay. Now, that being said, this is how we're organizing our trade. We're not there at our entry yet. So what I'm going to do in this particular case, yeah, Sam, yeah, this contract expires, or I'm not looking at taking this as a trend trade, right? This is not a trend trade. This is a swing trade. And as a matter of fact, this is an intraday swing trade. I expect this trade to be done likely today or tomorrow in tomorrow's session. Probably not beyond that. But I'm making that good till canceled on, as far as those orders, so that I don't have to replicate them tomorrow. So I'm going to go ahead and I'm going to click on confirm and send, and we're going to take a look at this trade. Now, we've got the one thing I need to do, I'm going to come back and edit this because sometimes this happens in trading futures, is if I leave this position effect at auto, it takes these closing orders, what I want to be closing orders, and it makes them opening orders. So I want to make sure that if I'm entering the trade by initiating a long position, that when I'm closing those orders, when I have those closing orders, either I get stopped out or I get to my target, that those are closing down the position that I have, not opening new positions. So now I'm going to go to confirm and send. I'm going to make sure that this is to open, then to close, then to close. Those are OCO order or one cancels other. My buying power effect is going to be my initial margin in this trade, the amount that has to be held to initiate this long position in this trade. I'm going to put this in my futures group and we'll see if we can get this. Probably not going to fill yet because we're not quite there yet. Price has not broken out of that range that I have established. Okay. I'm waiting for price to move up through that resistance level at 64,134 in order for me to enter this particular trade. Now, if you have questions about bull flag strategies, we've got a couple of great webcasts and a bunch of archives that talk about bull flag trades and this whole idea of waiting for the close of the high of the low candle and a move above that level as a trigger for entering into that particular trade. We've got a webcast called Trading Price Patterns that focuses exactly on this idea of trading flag patterns. So now that we've done this once, this should be familiar in that process. Speaking of being familiar, we've got a survey, feedback survey out there in the chat. So my comment to you, my request to you, is to simply fill out that feedback survey. Let us know what you think. It helps us to make these sessions better. So Sam, $2,400 for a bullish trade on Bitcoin. So remember, when we put up that $2,400, we're not buying the contract with that $2,400. That is simply the initial margin amount that we have to hold in order to initiate that position. Here's what that gives us. It gives us the potential exposure to the notional value of this particular contract. So those margin amounts we find by going to the symbol, and we can click on the drop down box and we can click on futures. And here's our micro Bitcoin futures. The initial margin to go long or short is the same here, 2,475. And that's what we are holding in that position to initiate that position. As opposed to /BTC, which is the large contract. If we come down to /BTC, it's in our list here. Let's come back up here. There it is right there. /BTC, 123,453. Much larger notional value, but also much larger initial margin in the trade. So one of the reasons that we talk about using the micro futures in this particular case is the fact that those initial margins in most cases, not all, but in most cases are substantially smaller than the initial margins in the full size contract. So that's one of the reasons why we do that. But remember, we're not buying that contract or selling that contract necessarily. We are initiating a long position or we are initiating a short position in that contract. I'll show you some other ways to find that margin information as we get into this discussion. So there's /MBT, /MNQ with that weaker than expected CPI number. Let's take a look at /MNQ, and this is the micro NASDAQ contract in terms of equities, and starting to see that move up a little bit today. Again, some of that up and downedness going on here in the last few days, as we've seen cooling in the semis, we've seen cooling in the software space, but we've also seen heating up again in the AI space. So back and forth it goes. And the same kind of thing happening here. We get that little bit of a bull flag type of pattern here in this particular case. All right. So now starting to see this potential bounce. So earlier, as I was looking at this, when I was prepping for the class, this is what I was looking at, right? Is that type of pattern. Let me kind of stretch this out so that you can kind of see what I was looking at here. Let me just zoom right back there so that you can kind of see this pattern. That bull flag perspective, right? Rally up, pull back, and then rally. And this is one where, had we initiated that entry into the trade on that close above or the trade above the high of that low candle, very likely we would have been stopped out. So this is maybe one that has changed a little bit in this particular case. We get this rally up, it's broken back down below this level. The cash market is up and running. So in this particular case, I might change my tactic a little bit in terms of trading this on an intraday basis. I want a little bit more confirmation that the price of this futures contract is in fact moving higher. My ADX, my trend strength gauge, is falling off a little bit here. So this trend, in fact, to the downside in this short term is weakening a little bit. It's still a strong trend. Anything above the 25 level on the ADX should be considered to be a strong trend, down or up. This is directionally agnostic. So it does not matter what direction price is moving. The ADX is going to tell us how strong that movement is at a particular point. So right now, this downward movement that we're seeing is not a very strong downtrend. It's not as strong, certainly, as that uptrend was. So what I'm going to look for here then is a move back in the same direction. My bullish thesis, I think, is still here intact in this particular case. So I'm going to put this back to auto so that we can see it. What I'm going to do is I'm going to look at, again, trading this shorter term impulse move back towards a resistance level, because I've got a resistance here again around 3,309 mark on the index. So what I'm going to do, again, I'm going to use my line tool to draw this out so that you can see what I'm looking at. I'm going to draw my line from that support back down to here, or back from that resistance level, that top of that big green candle, down to that level of support. I'm going to take that line and I'm going to duplicate it. And when I duplicate it, I'm going to put it right here where I'm finding perhaps a little bit of that support in this pullback. We had a little excursion down below that level, but that's going to be a little more conservative than if I had put it back up here on that breakout or that supposed breakout. So I'm detuning or attenuating this potential upward move a little bit. Now what I'm going to be looking for, and I'm going to just zoom in over here on the right-hand side because I squished this down a little bit. Let's go to auto. I'm going to be looking for a break above this high right here. That green candle, that little shooting star candle right there, is what I'm going to look for an entry into the trade. Could I get into the position, initiate this long position at a lower price? Yes. That doesn't give me the confirmation that I'm looking for. So the confirmation I'm looking for is a move above 29,832. 29,832 is my breakout point. So that's where I'm going to look for confirmation. I'm going to stop this out if it goes below this level right here, where it's already established a level of support. 29,682 is going to be my stop. And then my target is going to be right here at 30,104. We'll call it 30,104. 30,104 right there. So again, I'll just put my labels on this really quick. There's my target. There's my entry into the trade. And there's my stop out of the trade. This should be a familiar process to those of you that have been here in this webcast before. For those of you who have not been in this webcast, it becomes a simple way to keep track of what I'm looking for in terms of this trade. And I'm just putting labels on the chart. And again, I'm not being terribly particular or terribly precise about this, other than I want to see certain levels broken or not broken in order for me to enter a short-term impulse move type of trade like this. So now we know where our levels are. 29,832 is going to be our entry. So I'm going to put my cursor on that level, right click. I'm going to buy custom with OCO bracket. So whoops, let's go buy custom with OCO bracket. This is one of the ways that we've done this before. There are other ways to place trades. This is not the only way, nor is this mutually exclusive. Trader could be, if they have the margin account available to do that, be long a contract and be long another contract if their intent was different in the trade. So let's go to 29,840, 29,840. We're going to make this 29,840. We're at 29,752. So we're going to want to wait. We're going to wait to get in this trade, 29,840. And that's going to be a buy stop. Now remember, a buy stop is going to work just the same way as a sell stop. So if this were moving quickly, if this were a fast market, there is the potential, because we're going to let that be substituted by an exchange designated limit order. There's a potential that that order might not fill if price were to quickly gap to the upside in this particular case. I'm going to leave that as a day order. We're going to put our target up here at 30,108. 30,108 is going to be our target, which says sell it at that price or better. 30,108 is going to be our exit on a limit order, and I'm going to make that good till canceled. So if it does gap up, that's great. If it does get a big run to the upside, that's great. We're going to get out at that price or better, depending on what that next available price is. And then our stop is going to be here down at 29,683, 29,683, 683 is going to be my exit out of the trade if it goes in the opposite direction. We're going to make that good till canceled. I'm going to confirm and send. And you notice what I just didn't do. I want to make sure that those are to close, to close. I want to make sure that my exit orders are actually closing the position that I want to get out of. Click on confirm and send, read through this order. Now, you notice that my notional value is a little bit higher in this particular contract than it is in the Bitcoin contract, but my buying power impact, which is translated into my initial margin into this trade to initiate this long position, is a little bit higher than that Bitcoin, that micro Bitcoin initial margin. Individual contracts of different products are going to have different levels of volatility. Because they have different levels of volatility, the futures exchanges will set, along with the brokers, set different levels of initial and maintenance margin requirements for those positions. So that's why this margin requirement is a little bit higher than the margin requirement that we saw for that /BTC or MBT, the micro Bitcoin. So I'm going to put this in my futures group. We're going to go ahead and we're going to click on send. I'm going to read through that order, make sure that's what I want, making sure that I'm aware of the transaction costs associated with that order, and I'm going to put that order out there. What I'm waiting for in this particular case, and it is exactly that. It is, hey, I'm waiting for the scenario to occur to take me into the trade, and it's not there yet. We're starting to see some upward momentum. That trend strength is gaining. We might get an entry order in this fill. So the duplicate that I did on the target measurement, I just simply went to this impulse move. I was initially looking at the little bit of a pullback here. We're kind of in that same range. I just did that range here and then duplicated it to the upside. It's simple. It really is just simply looking at that bull flag type of pattern, that this distance right here in a bull flag is often repeated by that distance right there. So if that's distance X, then this is oftentimes going to equal distance X as well. All right. All right. So let's take a look. Let me clear those drawings here. And I'm going to put this back on my, there we go, my pointer. And the other one that I was going to look at here really quickly is /MGC, because gold, given the fact that once the CPI print came out, yields, treasury yields dropped. That meant that gold kind of rotated back into being kind of that location for yield seekers. /MGC, the micro gold contract, is doing exactly the same thing that Bitcoin's doing. Not exactly, but it's similar type of pattern to Bitcoin, to NASDAQ, to the S&P 500 to a certain extent. And you can see where our trend strength is. This is still a very strong trend even though it's kind of going sideways here, that trend strength kind of backing off a little bit. So just kind of dissect this a little bit more for those of you that are technical analysis aficionados. By the way, Scott Thompson teaches a great webcast uh, on beginning stock trading where he talks about technical analysis on a consistent basis and talks about using some of these price patterns as well and some of these processes. One of the things that technical analysis would suggest is that the midpoint, for those of you that are pivot point aficionados, the midpoint of big green candles or big red candles oftentimes acts as a level of support or resistance. So if I were to kind of just eyeball dissect that big green candle that we see here on /MGC, the reason for this move, that green candle, that coincides with the timing of the CPI report this morning. So that's what drove these initial moves in these contracts. Now, as the market's kind of settling in, we're half an hour into the cash market, we're starting to see some of these things play themselves out. So it doesn't mean that this is going to continue, but this is a typical pattern that would suggest that. So one of the ideas that comes from trading futures is this idea that if a position or if a price can hold above the midpoint of that first initial move candle, that midpoint oftentimes acts as a level of support or resistance. So I'm going to eyeball that, and I'm going to just call that right 40.70. And all I'm going to do is I'm just going to draw a line right across there, 40.70. All right. Now, one of the other ideas behind this, and this is a little bit different than that bull flag type of pattern, but this is the idea that if a price can break above the high of the first 30 minutes, then that oftentimes dictates a direction for the rest of the trading session. Doesn't always work that way, but that is one of those ideas. So we're going to do this one a little bit differently here because this is kind of going sideways. Now, what we've done previously in the last two examples is we've done this bull flag type of stuff, right? And we've been looking for some kind of entry either on the close above the high or maybe a little bit higher, and then getting into the trade and then shooting for this target right here. We're going to use the same kind of target definition, the distance that impulse move made, but we're going to wait for a circumstance here, and we're going to wait for the circumstance being the break above that high point in that impulse move. A little bit more confirmation, a little more conservative in getting into the trade. We got to wait for something to happen here. But it might not. But when it does, if it does, that gives us a little more confirmation. So what I'm going to look for, initial impulse move right there. I'm going to be looking for a break above that level. So I'm going to draw this in with my line tool just so that I've got some consistent, clear lines so that we can see what we're looking for. Line tool right here on the Thinkorswim platform. Down at the bottom of the chart, bottom right-hand side, I'm going to choose that line tool. And I'm going to go right here to that high, 4112.9. We're going to call it, for easy math, 4113. And I'm just going to put my line right there, 4113. That's what I'm looking for in terms of this entry. So now what I'm going to do is I'm going to take another line, and I'm going to just drop that line right down here to that bottom of that impulse move. And again, this is all discretionary for sure, but I'm going to right-click on that, and I'm going to duplicate it, and I'm going to take that back up here, and I'm going to put it up on top. And the reason I'm doing that is because I'm looking for symmetrical movement. Technical analysis suggests, doesn't guarantee, but suggests that price often moves in symmetrical amounts. So if I'm going to put my target up here, I'm going to put my target for gold right back up here about 4189. We'll call it 4189 at that point. That's going to be my target for this trade. But it's going to come on a breakout here. So let me label this so that you can kind of see what we're looking at again. Target, 4189. There's our target. Entry is going to be right here. And our stop, it gives us a nice natural place for that stop. Below the midpoint of that green candle becomes our stop. So you can kind of see how our risk definition is here. This realistically becomes about a 2-to-1 reward to risk type of trade just by the nature of how we've structured this approach. So we're looking for that target up here at 41.89. Our entry is going to come at 41.13. So I'm going to right click. We're going to go buy custom with OCO bracket. You've seen this story before. 4113 is going to be our entry price into the trade to initiate this long position. We'll make it 4113 even. We're going to make that day order. We're going to make that a buy stop. Stop, wait. Because if I just put that in as a limit order, it's going to fill when I hit the button that says confirm and then send. If I didn't put that as a stop or as a buy stop order. But again, remember, buy stop order is going to work the same as a sell stop order in terms of an exchange designated limit order. So my target again, we said 4189 is going to be our exit. 4189. That's going to be our exit. We're going to make that good till canceled. And then our stop is going to be here at 4071. 4071. We'll call it 4071. All right. Now, here's the thing. There's a possibility that we could not get into this trade. There's the possibility that we could get into this trade and get stopped out. There's the possibility that we could get into this trade and then have the market get into a fast moving condition to the upside or to the downside and have this sell stop get rejected or not filled, essentially moving around that range if price moves outside of that protection range. So that's something to pay attention to. There is risk in both directions in this particular case, in that case, as we take a look at it. So we're going to go ahead and I'm going to click on confirm and send. But before I do that, making sure those are to close and to close, click on confirm and send. My initial margin into this trade to initiate this position is 3,605. That's my initial margin into these micro contract. Into this micro contract, we're going to put that into our futures group. I'm going to click on send and we're going to wait for that order. And so what I'm going to do real quick, go to my gear icon. I'm going to show my orders so that you can see how this lines out. There's my trade right there. That's how that trade is kind of setting itself up. We're not there yet. It's not, we kind of stalled out. Initially, as I was prepping for this class, these were looking like they were very quickly. Now the market's kind of slammed the brakes on. However, one area where maybe it hasn't, and this is what I wanted to talk a little bit about here. Let me go back to my grid side by side. I want to come back over here to /MCL because we've seen crude oil moving pretty specifically and pretty quickly in the last couple of days because of that geopolitical risk. But notice what's going on right over here. This is the left-hand side of this grid. This is the micro crude oil contract. That resistance level right around the $80 a barrel mark or so has been tested a number of times. It was tested as a support level. It's been tested now as a resistance level once and twice, and now 3 times as that resistance level. There's that $80 mark. As we translate this over to the right-hand side to the intraday chart, that $80 a barrel mark kind of runs right about there. But what I know is that, we're starting to see some trend strength picking back up as this moves to the downside. But I also know that in the longer term, there's some movement going on as far as some of the longer contracts. So likely to see this resistance level. My thesis or my opinion in this particular case is that in the near term, this resistance level may hold. In the longer term, we may see a rise in the longer dated crude oil contracts. So I'm going to go back here to the trade tab. And I'm going to scroll down to the bottom of the option chain. And I'm going to go to the product depth area. And in that product depth area, what I'm looking at now are the prices of the different expirations or delivery dates for this crude oil contract. So here is the, let me kind of zoom this back up. Let me close these down really fast. There we go, so that we can see this. Here's my August contract, which expires in 6 days. Here's the September contract, which expires or rolls off in 36 days. And then I go out here to the November contract and the December contract. We've done this before. We've traded a calendar spread on crude oil. So what I'm going to look at doing here in this particular case is I'm going to trade a difference between these two contracts. I'm going to go short this current contract, or in fact, I'm going to go to the September expiration because I think that's going to play itself out a little bit more here. I'm going to go to the September expiration and expect that it's going to go down, and I'm going to expect that the November expiration is going to go up. So what I'm looking at is playing this difference here. Let me see if I can kind of squish this around so that you can see what I'm looking at. Let me close these symbols down so that we can just look at this. My expectation is that September price is going to go down and November price is going to go up. So the difference between these two right now is tracking at about $3.20 or so, the difference between these two contracts. What I want that difference to do is get smaller. So if I sell this contract, or sell this calendar spread, essentially what we're creating, for $3.20, I want to be able to buy it back or close it down for less than that. So I want the price of this difference, that difference in those two prices, to get narrower. If it does, that works in my favor. If it doesn't, well, you know, that's going to be risk on both sides of this equation. So there is risk in this trade, but we're trading the difference between these two contracts. Now, I don't want to belabor this too much. I'm going to put this on and we'll talk more about it as we look at this over the next couple of weeks to see if this plays itself out. But what I'm going to do is I'm going to come up here to my grid and I'm going to open this up to my futures contracts. I'm going to go to my September expiration, 36 days to go. And I'm going to click right here on that little drop down arrow, and I'm going to find the September, November calendar spread, futures calendar spread. It's trading right now at about 286. So it's already come down from where I was looking at it before when it was currently trading at about $3.20. That's what I want to have happen. I want that difference to get smaller. I'm going to right click on that and I'm going to sell that calendar spread. So if I click on sell, you see the order that it creates. Short the September, long the November, and I'm doing that theoretically now for a credit of about, it's bouncing around between 285 to 305. So fairly wide bid-ask spread here. I'm going to go ahead and I'm going to fire this order off, and I'm going to put this in our futures group so that we can see it. And we'll see if we get it. All right, we got it for 316. So now I'm going to go to my monitor tab. I'm going to go to my futures group. And here's my calendar spread. Got it for 316. As long as that mark price is going down and is less than my trade price, I'm making money on the difference between those two contracts. Now, here's the cool thing. There is some margin relief in terms of that initial margin because I've got one long contract and one short contract. The challenge, though, is they don't always have to trade opposite one another. Both of these could go up. Both of these could go down, in which case I'm losing on one side or the other. So it is not without risk, but it is a trade that leverages that idea of time-based changes, especially in a commodity contract. So we'll talk a little bit more about that particular trade. I know we ran through this pretty quickly here today. My thanks to Scott Thompson for helping out in the chat today. I know it was very busy and I appreciate your comments. If you want to learn a little bit more about cryptocurrency, about flag patterns, whatever, this is your place to go. YouTube.com/@TraderTalksWebcasts. All we ask is that you click on that subscribe button. It helps you out, it helps us out, it helps everybody else out as well. Makes it easier for you to find our content. And if you pop in here and type in flag patterns, you're going to find a bunch of content about flag patterns right there. Rachel, Barb, me, Scott, a bunch of people talking about flag patterns right there. And if you want to learn a little bit more about cryptocurrency, like we talked about, just type in the word crypto, and you can see all of the cryptocurrency webcasts. There's the full playlist for a Cryptocurrency Basics webcast. My thanks to Scott Thompson for helping out. My thanks to our great production staff. By the way, we're going to be in Chicago this weekend talking technical analysis and options strategies. Come and join us. And more importantly, if you want to learn a little bit more about futures, come and join us in New York, August 28th and 29th for our Advanced Options Strategies workshop, where we do talk about futures for part of the workshop. So thanks for joining us for that. We will see you guys again very soon. Take care, everybody. Bye-bye.